Good day, ladies and gentlemen. So in this video I'll be teaching you a beginner friendly scalping strategy that you can use to make money in the forex market. Okay, I said this strategy is beginner friendly because it is very easy to actually execute. So what do you need in order to execute this strategy? The very first thing is an understanding of what we call an inside bar. Okay, so not everyone knows what an inside bar is, so I will be giving an explanation. So an inside bar is more or less like the opposite of an engulfing candlestick pattern. Okay, and if you know, an engulfing candlestick pattern is simply a two candle pattern, whereby the second candle totally engulfs the first one, in the sense that the high and the low of the second candle is higher than the high and the low of the high of the second candle is higher than the high of the first candle. The low of the second candle is also higher than the low of the first candle. So that's where the term engulfing, meaning it covers it up completely. That's where it's coming from. Okay, so the opposite is the case for an inside bar. So when you're dealing with an inside bar, you have a situation whereby the high and the low of the first candle happens to be such that it engulfs the high and the low of the second candle. Okay, as you can see, the high of the first candle is higher than the high of the second candle. Also, the low of the first candle is higher than the low of the second candle. Okay, so when you have a situation like that, this is known as an inside bar, because it is like as though it is inside the first bar. Okay, so how do you utilize this strategy? Very simple. I'm going to show you with a few examples, but before I go into the example, let me just quickly give you a diagrammatic understanding of how you're going to trade this particular system. Okay, so all you need to do is get an horizontal line and place it just at the tip of the eye of the first candle. You also place another horizontal line at the tip of the low of the first candle. So what you're doing is you're basically waiting for price to break either above or below this range. Okay, so if it breaks above, you're taking a sell trade. It has to break and close, not just break. Okay, to avoid fake outs, it has to break and close. So when it breaks and it closes above the high, you enter a buy trade. Your stop loss is going to be a few pips below the level that got broken, and if it breaks below and closes below, you are entering a sell trade. Your stop loss a few pips above the level that got broken. Okay, so without further ado, let's dive right into a few examples. So this is the very first example I have for you right here. You can see let me move this horizontal lines so I can point out your first candle and second candle. Okay, so look at this. This is your first candle. You can see that the high of that first candle is higher than the high of the second candle. The red bar right there is your second candle. You can see that the high of the first candle, let me use this one instead. You can see that the high of this candle is higher than the high of that red candle. Also the low is lower than the low of the second candle. So I'll just use horizontal lines to mark out the boundary of the first candle. This is my first candle, and this is my low of the first candle. So I've marked out the high and the low of the first candle, and I'm simply waiting for price to do was to break either above or below. And as you can already see, price broke and closed above right here. So I'll be taking my buy trade once that candle closes in order to move in the upwards direction. My stop loss is going to be a few pips below the level. Okay, there was a retest, but it wouldn't have hit your stop loss. You have to give a reasonable room for your stop loss. Then you can target 1 to 3 risk to reward ratio. As you can see, price pushed up in the upwards direction. The same thing happened again, but you would have already entered your trade. This is another setup. Look at this. This can be your first candle. This can also be your second candle. As you can see, that's also an inside bar arrangement. So it gave you double opportunity here. You can see what happened. Price broke above right here and kept going up, so you would have still made 1 to 3 risk to reward ratio. Okay, so this inside bar system is very powerful. Another one is still here. right here. I don't know if you can see it. Okay, so this is another inside bar setup, because I can, visually looking at it, I can clearly see that the eye of this first candle, of that bullish candle just before the red candle, is higher than the eye of the bearish candle. Also its low is lower than that. So when price breakouts, you can take a buy trade. Okay, so you can see it pushed up a bit, but we are already far extended in the buy setup, so it didn't really go that high, but it still pushed high considerably. And let me give you an extra tip: if price breaks so far away and closes so far away from the level, if you're entering immediately, what does that tell you? Your stop loss is going to be huge, because your stop loss always has to be below the level. So what you can do, instead of taking your trade if it is far away from the what's it called, from the breakout level, wait for some form of retracement. Let price retrace as if it wants to retest, then you can take your trade. That will give you better risk to reward ratio. As you can see, this candle retraced a bit before pushing upwards. Okay, so basically that's the first example. Though within the first example, I've already given you some extra examples, but I didn't even plan to give you those ones. That's to show you that you can always find these opportunities. So this is the second example I actually planned to explain. Look at this, the low of that bearish candle right there. This bearish candle, its low is lower than the low of the second candle, which is the bullish candle. Also its high, it's higher than that of the bullish candle. Okay, so I'm simply waiting for price to break. You can see price broke and closed above. You can take your buy trade, target 1 to 3, stop loss a few pips below that level that got broken. As you can see, price pushed in your favor. Okay, so that's the second example. If you're getting any value from this video, please encourage me by subscribing to the channel and turning on the notification bell. Okay, so this is the third example. This is a very big candle right here. Anyway, it's still an inside bar, since the second is still an inside bar setup, because the second candle, its high is lower than that of the first candle, and its low, it's not as low as that of the first candle. So we simply wait for price to break that range, and then we take a sell trade, target 1 to 3, risk to reward ratio. And as you can see, price just keep moving in the downwards direction, putting us into profit. Okay, so basically that's what I have for you in this particular video. If you got any value, subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.